2. Hello and good afternoon, my fellow simpletons and degenerates. I hope everyone is doing great and we are having a wonderful weekend. Um, we're back at it again and trying to see what is our week looking like coming up when we trade, right? It's about that time. I did say I was going to go on at 5 p.m. So here I am, and looking forward to seeing what the markets have in store for us this coming up week. Uh, it's been a very busy trading week for us. At least this past week was, and now um, we have to think about what's in store for this coming up week. We have that Jackson Hole meeting happening, and futures, it's reading its little head. They're slightly in the green for now, right? And what are our savage stocks going to do? How do we trade this coming up week, given that we have possible rate cuts in the future, or do we this meeting that happened in Alaska between the United States and the Soviet Union, is it going to bear fruit? What happened? And just in general, what our individual stocks may do or may not do this coming up week, based on the fact that earnings are pretty much done. So we are at the mercy of a pretty unrelenting Wall Street, right? The market. Looks like we are slightly green on some of our futures, but how do we trade it, right? Are we gonna do uh, nothing and cross our arms, or are we gonna take what the market gives us? All right, let's go. I'm the Savage of Wall Street, coming at you live once again, and we're gonna talk a little bit just to see how we're gonna approach this coming up week. What do we got here? Hector's in the house saying good evening, Savage. Good evening, my friend. Welcome. Jude K is in the house saying good evening. Double D says thumbs up for the Savage. I appreciate it. Thank you, my friend. Mr. Lucky is in the house saying Savage. And then Double D comes in and says, I'll check out on the reply tonight. Thank you, Savage. I'm thinking you're saying on the replay. Hector is saying, white was a strong economy. Look forward to an interest rate reduction so much. That is a very good question. It's kind of what we're trying to cover, right? So, are we really in a strong economy? One can argue that certain individual stocks that are very heavily weighing down the Nasdaq are doing great and nearing all-time highs, but most stocks are not doing that great, and that's a fair evaluation, right? So is every single company out there an Nvidia? Not really, right? We have Nvidia flying. I believe we have Microsoft. The usual suspects are not really hurting that badly, right? But they're also not at 52-week highs. And this market is unrelenting, yes, but it's showing some weakness now, right? We were starting to see the little cracks here and there, and we keep hearing all these talking heads, especially people that are in line to be the helm uh, of the Fed, or people that seem to be kind of shoe-ins for the Fed position in case Jerome Powell resigns, or when he decides to walk away next year, right? These guys are already saying, we need rate cuts. We need to cut on a large scale. And what it's going to do to our economy? Is it going to cause, runaway inflation? Are we at stagflation? sticky inflation. Um, what's going to happen, and why is it that if an economy is so strong, right? Why are we pressuring the Fed to cut rates so badly? Why is the executive branch trying to pressure um, too late Jerome Powell to cut rates, telling them we need rate cuts, we need rate cuts? If we're in such a great place, why is it that we're just at such a stance between the executive branch and the Fed to cut rates? Why is President Trump always saying, that we need to rate cut, we need to cut rates, we need to cut rates, and Jerome Powell just keeps saying, look at the PPI that just came out, right? Producers are telling you, producers in large scale are telling you, we are paying more for our goods and services, for products, right? Um, we have to pass that on to the consumer, and that's where the disconnect is between you know the market and just the economy as a whole, which is telling us, right? These are little red flags that we look for, and they're telling us that right now things are going to cost more. Things do cost more, and you feel it in your everyday life, right? When you go to the store and you spend, say, $100, are you buying the same stuff that you were buying um, for $100 that you were buying 5 years ago? Let me rephrase that. Can you buy the same amount of items for the same price that you did 5 years ago? Can you do that now? And the answer is no. Now we do know that inflation happens, right, at an average of 2% a year. Okay, so right now, if that was given, right, we would, even if it's compounding, right, $100, then you have 2%. That's $102 for the next year, and then 2% of 102, then 2% of 104.5, and so on and so forth. So right now we should be paying around 100, I don't know, 110%, right, than we were back in the day. So 10%, 15% more, something like that. But stuff is actually worth, or costing 40, 50, 60, 70% more. And that's the disconnect, right? That wages have not gone up by 50%. If anything, wages are pretty steady. And people are actually making less money now. More people are becoming unemployed. And because the jobs that have been lost overall have been, high paying jobs, especially in the tech industry, jobs that are available are asking people to take less money now because they know that there's like this vast influx of layoffs that has happened of people that were making, $200,000, $250,000 a few years ago. Well, now those people are being asked to take less money for the same amount of work, or they're overqualified for the jobs that they're applying for, and so you have a pool market, right? Um, or a market pool of of individuals that are, that have the degrees, that have been told, take out a loan for school is good debt, right? And you'll be able to pay it off in a few years because you're going to be making 150, $200,000 a year. Well, now those people are applying for jobs that pay $80,000 a year, $90,000 a year, and so it just doesn't connect, right? It doesn't sit right. How people are now making less money, paying more for the same goods and services um, that they were receiving a few years back, and even now. I mean, Jesus Christ! Just look at poultry, right? Look at dairy. Look at the meat, and so I see that meat cost now. I think we used to pay like $12.95 for a pound of ribeye, here at the store. Now they're charging $17.95 for that same pound of ribeye. Now, given this is just a microcosm, right? Not everyone lives in the same area, and not everybody is going to the same stores. I understand. But if you look at just your overall expenses, right? I think that you probably could agree with me that you're paying more now than you were, a few years back and even last year. Things are vastly more expensive, and that's exactly what the reason is for people asking for rate cuts, right? For why these yahoos that are next to power are telling people, the Fed, you need to cut rates because people want to take out loans, right? All these businesses, the small businesses, small caps, mid caps, uh, they're taking a bigger hit in the stock market, but because they're small caps, right, and they're not necessarily the large cap stocks, we don't take them into account as much as we would like a Microsoft or an Nvidia, right, an Amazon. So that's the disconnect right now, and so I think that the market is starting to show that disconnect, and it's starting to get a little nervous at this point. All right, let's see here. Who we got here? Cannon Fodder is in the house. Cannon Fodder, good evening, my friend. Mr. Lucky is here saying my Bull 1750 cash secure puts are going to be a lovely sight tomorrow morning. Hopefully, because I have 17. I mean, I have the same puts, cash secure puts expiring October and some, I believe, September. So I'm totally on board. I actually have some 1250s expiring in 2026 that I sold, I think, like a month ago or so, and I got a big chunk for those. It's money in the bank at this point. If I see some really good opportunity elsewhere, then I'm gonna go buy those back and then deploy that capital as I see fit. Wherever it is that I see some really good some really good opportunity. Which brings me to my next point. Where is the opportunity right now? Well, let's look at our portfolio, right? Let's look at our favorite stocks. Um, SoFi seems to be showing a little life, and it's up 13 cents overnight right now. C3.ai is up 31 cents. Um, Unity is down 3 cents. Recursion Pharmaceuticals is slightly up right now. I think 1.9 cents. Rivian is slightly up right now, 5 cents. Our SOXS Direction Daily Semiconductor Bear ETF that is leveraged is slightly down, which means semiconductors are slightly up, right? GameStop is just staying in the $23 channel. It's trading at 22.96 at this moment. Archer Aviation was down 1.6% on Friday, and that was just slightly up 4 cents. Supermicro Computer or SMCI is just barely slightly up. Roblox is slightly up. Sentinel One is 1683, slightly up. Riot is slightly up. So everything seems to be just slightly up. Big Bear is 611. It's actually slightly down, like 2 cents from Friday. Iova, Prairie Operating Company is slightly up, almost a cent. Let's see here. Ethereum is $4,400 and $4,468 right now. If Ethereum goes under $4,000, I think I told you guys that I was gonna proudly buy one. I'd like to take another chunk of it or another stab at it. 3,500 would be great. Now, you guys, I did tell you guys that I was looking at Bullish. BLSH is the ticker. It's up overnight 2.5%, $1.61. It's $71 at this moment. Now, if Bullish ends up in the 60s or 55s. Like I told you guys, I think I'm going to take a very good look at it, and I actually may go into bull and buy back those cash secure puts and then deploy some of that capital here, because I'd like to start taking a position on VLSH. Um, it's something you guys can put on your radar as well. Same thing with Figma, FIG. Um, I'm very curious to see, how Figma is going to trade tomorrow. Right now, it's 80 cents. I'm sorry, it's $80. It's 88 cents up overnight. So it's pretty much a nothing burger. But let's see what opening holds, right? Even if in the pre-market things show a certain way, you can never really take it into account, because such a small amount of shares can move the price, right? So you gotta wait until opening and see how it moves. See what the news of the day are gonna be, right? There is a world of difference between this evening and tomorrow morning. That's 12 hours, 13 hours until market open at this point. That is an eternity in terms of market speak. So much can happen between now and then that you really shouldn't take these overnight pricings. You shouldn't take them as seriously as I think some people decide to take them. I don't know why I decide to put so much weight into it, because it's not necessarily going to hold true tomorrow morning. So like I said, Mr. Lucky, your bull 1750 cash secure puts, I think, are going to be good. I'm going to hold on to them a little longer myself. I believe that bull is going to hit a little pop, and then I may think about maybe going in and taking money off the table. But something tells me I want to dare the market to give me those shares, because it was such an attractive cash secure put, and I brought in a nice chunk of premium that I don't know, man. Unless we go up considerably between, and what I mean is bull, goes up considerably, like to the $20 land, and those cash secure puts really shrink to like 70%, 80%. Unless that happens, I just don't see me going and buying them right away. Unless I really do see some opportunity out there. For example, let's say Figma goes and touches $50. Let's say bullish touches, under 60, 55. In that case, I'm definitely gonna take a serious look at my portfolio and see where I can trim and bring in more capital, right? Mando number 5 is in the house. Not to be confused with Mango or Mambo number 5. The Visual Arts is in the house. What is up, my dude? I have $1,500 ready to start. Where would you begin, famo? Blessings, fam, says The Visual Arts. Good evening, my friend. Ricardo Canales is in the house saying savage. All right, well, if I was starting with $1,500, right? You obviously, are limited, right, towards where you can go with it. But yes, for shits and giggles. If I really wanted it to have a balanced portfolio, I would look at numerous companies that are in under $5, right? For example, Lucid. And I do know that I've been trading Lucid for a bit. Lucid has lost a lot of value in the last few years, and it doesn't seem to like want to go above like $4, right? It always comes to like 3 and change, and then it hits a little a ceiling, and it just gets pushed back down to the 250 to 225 land. And that's kind of where it trades. But guess what? One thing about Lucid is all these ETF funds, all these big fish really, really are buying. Just look at who's buying and when, right? I think Vanguard just bought some more. Vanguard just bought some, several million shares, and so did BlackRock. Why are these companies taking such an interest on a stock that's obviously boo boo, right? Um, like, what do they know that we don't know? And I keep telling you guys right now, Lucid is a buy. Now, this is obviously a very biased look, into Lucid because I hold it, right? I have several thousand shares. However, it does not take away from the fact that it's a good company. I personally think, in my humble opinion, that it is a good company. And there's so much smart money that has jumped in and has just been cannibalizing all the shares out there. Do you guys remember SoFi and when it was in the fours and fives and how people were just I don't know why people were selling at $4 and $5 because gosh, such an idiotic move. Now it's sitting at $23. Imagine if you would have bought, I don't know, 1,000 shares of SoFi when it was 450, 475, right? Right now, you would have 5x your money easily. All you need is patience, right? I mean, Warren Buffett is the one person that tells you that the stock market is the one device created to transfer wealth from the impatient to the patient investor, right? And that's exactly all you need to know. So that's why I just keep buying more Lucid and I keep seeing where the smart money is, and I don't know if you guys are going to be able to see this. I'm going to try to share my screen here, um, and let you guys know what I see. Right? Let's see here. All right, here we go. Let's see if you guys can see it. I want to try to share my screen. All right, if you guys can see my screen, because last time I tried to share, I was on black for some reason, right? Um, Here it is. AI overview, right? It just tells us BlackRock is a significant investor in Lucid Motors, having established a position in 2021 and increasing its stake multiple times through its several holdings now represent a small fraction of its large portfolio. For example, BlackRock added a position in the second quarter of 2023, fourth quarter of 2024, holding over 48 million shares at the end of 2024, right? They actually hold over 60 million shares at this point. And it just goes to show you that, the smart money keeps adding. It just keeps adding. Same thing with Vanguard. And if anybody holds Vanguard or knows anything about Vanguard, still that black screen. I'm sorry, guys. I don't know what the hell is going on. I wish, sometimes I share and it's just fine. And sometimes I share and it shows a black screen. I'm going to have to look at like maybe what is it that I'm doing wrong, but it's definitely on my end, I guess. And I just kind of got to figure it out. I got to see if there's another plugin that I need when I go live so that I can share my screen with you guys and you guys are able to see what I'm seeing, right? But anyways, you guys get my drift. You guys catch my drift, right? It's if BlackRock keeps adding and Vanguard keeps adding, there's a reason for that. These are investment entities that have people that they pay millions of dollars to every year so that they research these companies. They're not just going to go invest all this money into like some company that's it's in danger of going bankrupt. That's just not how they roll. They rather sell for a loss, take a massive loss, and use it as a tax loss harvesting type of deal than just having it sit dead in your portfolio um, without some forward-looking plan, right? And that's exactly what I'm trying to get at. So if these guys are adding millions and millions of shares, why shouldn't you add a couple of hundred shares? So to go back to your question, the visuals, um, if I had $1,500, I would look at maybe buying 100 or 200 shares of Lucid, right? Um, I would look at adding um, maybe 100 shares of BBAI, and I would do that via cash secure put. If tomorrow we're in the red, because it went up 5% on Friday, but we don't know what it's going to trade at tomorrow. So if tomorrow, let's say it goes under $6, right? Don't be afraid to go to October 17th and then selling a $6 cash secure put and asking for $105, right? So basically, you're taking $600 and you're saying to the brokerage, "Hey, I'm willing to buy these 100 shares of BBAI at $6. However, I like a premium for me having a bullish outlook on the company and putting my money at risk. I would like $105. So you're basically getting more than 10%. You're getting almost 20% of your return on investment right off the bat, and you got to wait till October 17th for either that contract to die and expire worthless, or for them to give you those shares. And then you guess what? You've taken a position, and now you have 100 shares of BBAI at $6, which realistically is actually under 5 because you got a premium for, right? So that's a move. Um, you had your 100. I wouldn't even do a cash secure put on Lucid, to be honest. It's so cheap you can just buy the damn stock at this point. Um, it's just the way that I feel because it's gonna move up probably by October, especially if there's a rate cut or two. Um, Borrowing money is gonna become so much cheaper that Lucid is gonna be able to then borrow money so that they can invest in the company and then keep growing. That's just what happens with these guys, right? Um, they take their money and they invest it right into their company. You know. Let's see here. Um, what other company would I put my money in? So yeah, now you took basically $600 to buy 100 BBAI. Lucid is $200. That's $800. So you still have $700 remaining, right? Okay. Um, well, you could basically go at market and buy 100 shares of RXRX. Um, Not the most terrible stock. It's actually a stock that I think I'm very bullish on, and it's one of my Savage 10 for a reason, or my Savage stocks, right? Um, it's just the gift that keeps on giving. It's sitting at 578 right now, right? And if you take the $100 and change for the cash you put from BBAI, and you bought 100 shares of Recursion, you still have roughly like $225. So with those $225, um, you can then go at market price and buy as many shares as possible of IOVANS. IOVA is the ticker. Um, there. That's how I would play that, right? And that's how I would have like a nice, healthy, um, and rounded portfolio of you know shares that I bought right at market price, and I'd have a cash secure put um, also in my portfolio. so that then you're having multiple positions now, right? And then you're going to see what the market gives you. If the market happens to run on Iovance and on RXRX, right, and they go up 5% or 10% in one day, you do covered calls on those shares, and then you can take that premium that you generate and you can go at market price and buy more Lucid, since or Iovance, since it's the cheapest stock, right? And so you will get more shares for your money, basically more bang for your buck. Um, and then you wait for those to expire worthless, and then make your move next. A couple of months from now, whenever those um, those contracts settle, then you could look at the market and say, okay, now I'm sitting on all this money here, or I'm sitting on all these shares. So then you can take the best educated approach that you can, and then you can go and see if you want to do some more cash secure puts, or do you want to do a combination of buying stock, selling covered calls, or do you want to do covered calls and a cash secure put? It's all up to you. And at that point, you may have looked at another company or two and say, I want to get, like, I don't know, 50 shares of this one company that's, like, let's say Open Door was back down to like 150. And then after all your covered calls or your cash your put covered call combination, you have an extra $100, $150. You can then go at market price and get Open Door at 150 and then wait to see what that does. And then you'll have now expanded your portfolio and have a larger stake, right? And that's how you do it. It doesn't take thousands and thousands of dollars. It doesn't take $200,000, $1 million. As you can see, with $1,500, you have a fair amount of options, right? And obviously, I chose those stocks that I'm talking about because I have them in my portfolio now. You guys could be looking at other companies altogether, right? And just based on how the market runs, and on um, your appetite for risk, right? You can either be more cavalier or more conservative in your approach. There's so many ways to skin a cat, right? But at the end of the day, as long as you have a naked cat, that's what matters. Um, so all right, so Kent's mom is in the house. Kent's mom, how you doing? Having a great Sunday, I hope. I hope you guys have had a very nice and restful weekend. I, for one, I had a terrible night last night. Um, you guys do know that I hurt my back at work, and I'm kind of out of commission for a while. So I went to the physical therapist on Friday, and she did some stuff. She was able to kind of pinpoint a couple of key areas that may be triggering, my pain. And then she did something where she put a lot of pressure into like these points and even her elbow, and it hurt. It kind of hurt and felt good at the same time. And she said I was gonna feel sore, so it was actually pretty sore. Um, but gosh, I went to my kid's soccer game and I walked a bit, and the most heaviest thing that I carried was like this little chair that's like a foldable chair. It's probably like 5 pounds, if that, right? And I don't know, man. Last night, around I went to sleep. I was feeling a little bit uncomfortable. I took some uh, some pain pills and I took a muscle relaxer. I passed out like around 10, around 11, something like that. And then at 1 a.m. I woke up and like I felt this throbbing pain, like right in like behind my femur, right, between the knee and the buttocks, and it was just like I don't know how to explain it. It's a really weird pain. You guys know how you feel when you're about to have a cramp and you feel that knot like tighten and it's painful, like a painful cramp, and you guys are like, You guys get like a I don't know if a charting horse is the name for it, but that muscle has a knot and it's just like super tense and it hurts. And then you have to like stretch it out or do something so that it starts kind of going down. It feels like that type of pain, but not as acute. Um, it's like a 30% of that. And it doesn't matter what I do, whether I stretch or not, whether I sit or stand or lie down on my sides, it's just there. And then it went from like 30% to like 40%, like at 3 in the morning. And I tried my best to go to sleep and I just could not. I had a terrible night. Um, it's not until like, I don't know, 1 p.m. today that I started, I sat down and I was just telling my wife that I'm going to talk to the doctor tomorrow and see if we can hurry this up and then maybe order an MRI because I just don't seem to get better. I mean, I feel better um, on certain days, and then like I go to sleep, which is like what I need, which is rest, right? And then I wake up and like I'm very sore. So I don't know if it's because I'm moving when I'm sleeping, and I mean, do I sleep that violently? I don't know. I don't think so. But for some reason, I wake up and I have like discomfort, and it's just this nagging pain that is just not going away, and it's kind of beginning to wear me a bit. So I'm going to talk to the doctor and say that maybe I can just hurry it up and get an MRI done because maybe even an X-ray. I don't know if you guys, I told you guys, or you guys are brand new into like the channel, or if you heard about my situation, but the doctor didn't order any X-rays on that first day, and I specifically told her, I really felt like I tweaked my back. I mean, I felt it. I remember saying, "Oh, that's biting. That my back is biting." That's the word that we use in my industry, right? Um, and then he just I didn't think it was that bad, but like as the night progressed, it just kept getting worse and worse, and then it was hard to walk at the end of the night, like 4 hours later, and it was just a really very painful situation. I took some pain pills. I iced that night. Um, I was able to go to sleep. I woke up like 2 hours later with some really bad pain, and it was just like shooting down my knee, and so it doesn't seem to be getting any better, man. I just, especially with the physical therapy, and it should be getting better. So at this point, I don't know. I think it's safe to say that maybe what we're doing is not working, and there's something else, right? There's something else, but I don't know. I mean, I'm not a doctor. I can only follow instructions, right? And maybe this is part of the process. I don't know. I've never had a lower back issue, but it's quite debilitating. So, anyways, um, I went to sleep. I think like around 2:30 or three, around 2:30 or two, and I woke up like at 4:30. So right now, that's what bothers me. Right now, it's not terrible. Like I'm sitting right now on this heating pad, and I'm kind of heating my lower back, and I'm obviously I'm in a comfortable chair. But this is what happens. I'm comfortable for like a few hours or a day, and then night happens, and then it's terrible the next day, and then it kind of it goes away, and it starts feeling normal. Not really, but and I feel like the soreness, right? And then it goes back, and it's frustrating to say the least, right? But anyways, you guys are not here to listen to me, go on and off about like my injury. Let's just keep going here. Um, yeah, Ken's mom, thank you for watching. I know that you're a regular, and it's awesome to see you. The visual arts is saying, Cashicure put, I'm learning for sure. That's the whole point, right? You want to learn, and then you want to put that to practice. And the more you learn and the more you practice, the more comfortable you get. And then the more that your portfolio grows, right? And then you're able to see when you start seeing your numbers go up a little bit and your percentages go up, right? And then you start seeing that you're actually outperforming the market. Then you start getting a little happier, right? But it's not something that you see overnight. Don't try to look for like a rich quick scheme here. This channel is for very like-minded individuals that want to be conservative in their approach to making money. And my goal is to have 100 millionaires um, come out of this channel, right? Come out of watching this channel and being able to read, you guys making a good amount of money and taking some vacations courtesy of gamblers and degenerates, and basically you being the casino. Right here, we learn how to be the casino. We're not the gamblers, and that's the bottom line. So, as any chance you get to put money into your portfolio, do it, right? And I assure you that if you just keep to the script, right, and then you see what the discipline is, and you stick to it. Um, you'll see a year and a half from now, big difference. And then, a year from now, you're going to see a bigger difference. And then 5 years from now, you're going to see a vast difference. And it's just one of those that you may not see it day to day, right? You may not even see it week to week. But when you look back, right, at history and the way that you trade and the gains and the way that your portfolio goes up, down, up, down, up, down, but like, in a, like I said, in a very level line upwards, it makes sense. That's when it clicks, and then that's when you start getting real happy and you start dumping even more money into your portfolio because you can now see, a big difference, and then you want to hurry it up, right? But even if you start with 1,500, $10,000 even, don't get greedy and don't try to go too fast. Go at a pace. This is a marathon and not a sprint. And let me tell you, the first $100,000 are the hardest to make. That is your goal. That is like the main. Of course, you want to become a millionaire, make $1 million. That's the goal for my channel, right? But in order to get to a big goal, you have to meet all these little goals first. So first, have all these little goals, right? Your first little goal is to put those shares, that you bought via cash secure put, and and then dare the market to put those shares to you. Whatever company you decided to go in, have that be a goal, like a small goal. Um, Cover call wise, have your calls or have your covered call or your shares called away. That should be another goal of yours. When is the first time that that's going to happen? Um, make your first $100, trading via cash secure put or covered calls. That could be something that's, a goal. And then after that, your $100, you're done. You check off that goal, and then you go like 500, and you check that off, and then you go to 1,000, check that off. And those are little goals that help you advance because it's hard to see you getting to $1 million, right? Because it's like your portfolio may be $1,500, so that seems almost unattainable. But if you go and you go by small goals and you keep going, you don't stop, you just keep going, that adds up. So I think that's kind of the approach that you got to take. And the first $100,000 are the hardest. After that, it starts happening fairly quickly. I don't know how to explain it. CKT is in the house saying 10 a.m. on Friday. Powell going to speak at Jackson Hole. Last year was when he signed the rate cuts. What's everyone's opinion on potential moves from the outcome of his speech? I was just literally, that's kind of how I began my show, is talking about Jackson Hole and what the ramifications of the PPI are. And at this point, we may not have a September rate cut. just based on how hot those numbers came in. It was like 90 basis points, right? And I think we were expecting 10 basis points. So that's a gross uh, miss. And so the fact of the matter is that, you're like, okay, it's only, 900 basis points. What's the big deal? But when you take into account that there's 12 of those that happen every year, and the trend is showing us that things are getting more expensive for producers. Who do you think is going to end up, they're going to end up charging? Producers always end up passing on the charges and fees to the consumer, which is us. And that's exactly what's going to happen. Now, 90 basis points may not seem like that catastrophic, but when it's one of 12 PPI reports, and then the next month we get another 900 or 90 basis points, and the next month we get, 1 basis point, and then you start going forward. And if you keep to that number and going up, you're looking at a potential 12, 13, 14, 15% increase in inflation. That's insane. That's ridiculous. That is a lot, because they want to keep it at 2%, and it's just not it's not possible when you're getting PPI numbers that are up 90 basis points, because that's almost a whole percentage point, right? And that's exactly why it's so important. Now, Jackson Hole, I mean, I'm sitting on cash right now. I'm sitting on cash. So I advise you guys to, do a lot of cash secure puts and sit on cash, because cash is king, right? Especially when we are looking at downturns and potential slope downs in the economy. Chase Rosita Parker is in the house. The visual artist is saying that's savage. Thanks, brother. So covered calls and cash secure puts. Hate that feeling. Get well, brother. Thank you, the visuals. Yes, cash secure puts and covered calls is the way, man. I would advise you to stay away from crypto. Stay away from buying calls. You're selling calls, but you're not buying them. So stay away from that. Because $1,500 is your capital is at a higher risk to go to zero than someone that has $100,000. So that's why you have to be a lot more conservative in your approach, and just keep using that method until you put, I don't know, 40 until you're at $40,000-$50,000, and then you can start taking a little bit more of a risk, not much, a little more, right? And then you get to 70, 75,000, and then you can take a little bigger risk, but not more, right? Not a lot, I mean. And instead of you taking a risk on, like, I don't know, $1,000, you can take a risk on $2,000 of your 75,000, maybe $4,000 or $5,000, right? Because it's not such a big part of your portfolio anymore. Yes, it's almost 10% of the portfolio, but it's still not as crucial as it was when you were at $1,500 for a total for your portfolio, right? Charlie C2 is in the house saying, "Hey, Savage, good evening, y'all. How you doing, my friend? I think I have 20 thumbs up, which is great. Thank you for watching, guys." Moneymaker Juan is in the house, says yes, and don't be afraid to be exercised and assigned. Actually, look forward to that. I look forward to being exercised and assigned. I look forward to daring the market to put shares to me. And sorry, guys, I have to move this little hot pad because my butt is literally getting hot. Yeah, don't be afraid to get assigned, because that's kind of the name of the game, right? I told you, look forward to that. Have that be one of your goals. And so if you get, assigned a cash secure put, great. Then go turn around and sell covered calls on that. And if you get assigned, your shares to someone because you sold the covered call, great. Take that money and then look for an entry somewhere where a company has lost, 10% on that day, or wait Give it a few days, and the companies you're looking at, wait for a day that a company you're looking at goes down 5 to 10%, and then do another cash secure put, right? That's how you play that game. John Harpster is in the house. John, good evening, my friend. I hope you're doing well. CKT is saying, I'm in mostly at cash secure puts across all accounts. Not all, but a lot. I'll take some major dip and buy more at a better price. And that's the way you see it. That's exactly the approach you have to take. This is why you go in when a company has taken a couple of uppercuts in the mouth, and they're bleeding, right? And they're down 10%, 15%. I love hit pieces because, especially on companies that I'm holding, as long as it's not something, ridiculous, I'm able to then say, you know what, I think I like what this with this company, what they're doing, and right now it's down 15, 20, 25% because of this hit piece. I'm gonna go and do a cash secure put, maybe one strike below where it's at, and go down 3 or 4 months, so that I can take a bigger chunk. I take advantage of the IV, the volatility aspect, and that's how I approach that trade. The visual saying thanks. Tom Kaufman is in the house. How you doing, Tom? Good evening, my friend. Would you go live tomorrow? Nah, I'm not going live tomorrow, man. I actually have to see my doctor tomorrow morning. I'm probably I may go live in the afternoon based on just based on how we how rough my physical therapy appointment is. I got to see my doctor tomorrow and my physical therapist. So, based on this weekend and me telling them kind of how rough it was, I'm going to see if they change the exercises that we're doing at physical therapy, and I'm going to see if my doctor decides to give me a shot, in my lower back. I don't know, man. There's just so many things. Like I said, I never had an issue in my lower back, and I'm just, you can't help but to read, right? There's so much information available, and I'm looking at what I may have done, and this is just me doing research, and taking into account a nurse that checked on my case. I may have bulged a disc, or I may have slipped a disc and injured a nerve, and so that nerve is triggered and it's inflamed. So, which is why when I take which is why when it something triggers it, right? And there's a lot of pain, and I take pain meds, even a muscle relaxer, it doesn't do anything. It still hurts, and I just have to wait, almost a day, sometimes some more, for that to go down, and then I feel okay, right? And then I'll start my heating and icing, and then I'll do a couple of stretches, and then I'll be okay. I'll go to physical therapy, and then that night, it flares up again, and I have a horrible night, and it's just frustrating. So, based on what I understand may have happened is, it could be that I have a strained back, and it's just I keep aggravating it, or it could be that like I said, the nurse said sometimes you slip discs, and you kind of mess with that nerve, and it messes with your sciatica. It could be a sciatica event that was triggered by me lifting that really heavy case. And when I say heavy case, I mean it's like a 200, 250 pound case that myself and a couple of other dudes were trying to lift, and then we had to lift it clean up from where it was, to go from grass to like a special deck that we had put on top of grass, and then be able to push it easier. So it's a fairly heavy object, right? And so, because you're moving around and you're working, sometimes you don't feel um, what happens until after the fact when your body cools off and then really begins to take a toll. And so that may have happened, in which case sometimes a shot in your spine, and I think it's an anti-inflammatory, what you end up getting, that kind of that kind of helps with the inflammation in that area, and it relieves that compression. And so it's just scary because it's your back, right? And I mean, I don't want to needle my freaking back. And I've heard of people that they end up getting a shot, and the shot ends up hurting a nerve, and then they have to go in and do surgery, or like it feels worse, So I don't know. It's a scary thing, but what can you do? It's just that things happen, and that's exactly why I'm trading. That's why I'm trading, and that's why I want to make sure that this channel reaches however many people it reaches, and I'm able to make 100 millionaires from this channel. If I can create 100 millionaires, I would feel really good about myself. That's my own personal goal. And so, yeah, man, that's the reason why I may not go live. I mean, I'm definitely not going to go live in the morning, because that's when my therapy appointment is, and that's when I see the doctor, right? It's like around 9, 10 a.m., 9 and 10, actually. So, I have to still travel to the doctor, wait, hour of physical therapy, then I see the doctor. I don't know how long it'll take for me to see the doctor. And then once I see the doctor, there's also waiting time, right? And then I don't know if she's going to order x-rays this time. I don't know how things are going to go, right? So best case scenario, tomorrow I go live at the same time as I did today, at 5 p.m. to kind of, say hi to you guys and see what happened in the market. And then you guys can talk about possible trades, or trades that you guys did, and let me know if you guys did a cash secure put, a covered call. Did you guys make money? Did you lose money? I'm fairly transparent with you guys, and I think I told you guys about my trades with CleanSpark, and I actually lost some money on Friday. Well, actually, no, because I made a few trades after the fact, I actually ended up in the green. But sometimes I'm going to end up in the red, and you're going to end up in the red because you're underwater for whatever reasons, and that's okay. The market goes up and goes down, but I didn't have to wait until October, right? Or I didn't want to, and then January. This is CleanSpark that I'm talking about. CLSK is the ticker. And I did some 1250 cash secure puts expiring, I believe, October, and expiring January. And I just saw that, my cash secure puts, I was under, I think I got like 250 for them or something. And then those were worth 350. And I just, based on everything that we're seeing, and based on all the opportunity that was there on Friday, I just said, you know what? I'm going to pull the plug, snip that cord, pull the plug, and then take my money. And so I was able to then exit those cash secure puts at a loss, and then take that premium, right? That collateral that they released, and I was able to then combine it and then go elsewhere, with that. And then I was able to bring, some big chunks of money to offset that loss, right? But now that I've made that move, I'm not looking to get out of those cash secure puts because I've already lost when I got in, and now I'm going to lose again. So, I mean, we'll see what happens, right? But the overall thought process is to actually stay until those get assigned, or I get back my collateral. You're daring the market to give you those shares, basically. That's what I'm doing. I'm daring the market to give me those shares. So we'll see. So anyway, so Tom Kaufman says, "Hey, Savage, we'll live tomorrow." I told you guys. DVisualize saying that September dip. Nice CKT. DVisualize are saying Tom Kaufman saying, how's the back? I just told you. I see too many people roll cover calls too far out and get stuck. Take profits and look for another trade. Yeah, I mean, you could do that. Moneymaker one is saying that he sees too many people going out far and get stuck. Well, so that's the deal, right? So you do cash secure puts, and for example, me, I do leaps, and I'm totally okay being stuck in 2027 with a cash secure put. If that cash secure put brought me 40% or more, right? So in a year, basically, I bring in 40% of my return on investment, right? That's right off the bat. That's where it's at. And so at that point, I just dared the market, and I've been known to actually wait, 9 months, 10 months. Yes, I have my money on the sidelines, but um, if the stock was to like take a big dip, I'm covered on that end. And if the stock was to run away 40, 50%, then, I can take my time and see what movement I want to make. Now, if, for example, I sell some leaps, some cash secure put leaps, right? For, let's say, for example, a $10 cash secure put leap out to 2027, and I bring in $4 for that cash secure put. Okay. And let's say that the stock goes up to $15, $14 on some run, and in a month, that cash secure put then is worth 40% less. Well, then I may just go in and then exit that cash secure put, because in a month, right, I was able to bring in 40%. It makes no sense for me to wait 11 months for the other 60%. So then I can take profits off the table and reassess. But sometimes the companies are going to keep going down. This happened back in a few years back. Companies are going to keep going down, and that $10 cash secure put, it becomes $6 because the stock goes from $10, and I sold a $10 cash secure put. The stock was already down 15, 20% when I did this, but it goes down to like $8 or $7, right? So now I'm kind of close to where my break-even point would be. Or I may even go to my break-even point. Say it goes to $6. I'm okay rolling at that point. I'm okay rolling and then, going and doing a $10 cash secure put, rolling it another year, and then going for like an $8 cash secure put and bringing in 25 cents or 50 cents of premium. So what did I just do? That 60%, that 40% became 60%, right? And I took in more premium. So now my cost basis is at $4. It may be at 2028. Okay. But I just brought in, another $2. So if we go back to the original trade, I really did, instead of 60%, 40% is 60%, but don't forget the premium. So I'm really like at 70%. So if you can in 2 years bring in 70% of your money, that's totally okay with me, because no bank in their right mind will give me that. Now that's just me. Everybody else trades differently, right? And again, just like those stocks went down to like $6, in another 6 months, those stocks could go up to like $18, right? That happened with SoFi. And then those cash secure puts, now they're sixes, remember? So now they're eights. Sorry. Now those $10 became eights. Those eights now, instead of being, I don't know, 6.75 per cash secure put, they go down to $3 or $2, right? Then I can go in and buy at $2, right? Exit that, get back my $800, because remember the $10 became $8. I get back my my 800 bucks, right? And I actually made money, because between the premium and then the collateral coming back, I'm able to then work it into like where I got a 50% return on investment in a year. That's pretty much wonderful to me. That's like That's what I try to do. Every year I try to outperform the market by like 60 to 80%. That's my goal, right? So if I bring in 50, yeah, maybe on the lower end, but the risk of me, losing that money was gone. There was no risk. I just put my money in the bank, so to speak. So I was able to generate 50%, on that cash secure put that seemed to have gone against me, but over time it recovered and went up, even more than the original amount. So, anyways, that's kind of the way that I trade, right? But you may have a different strategy altogether, and that's fine. That's totally okay. What works for me may not work for you. Highly unlikely, because what works for me works for, like, honestly, like 99.9% of the people that are watching me. But again, it just may not work for someone else because they may be a little more risk adverse, right? And they want to take higher risk. They want to do more calls. They're great at reading graphs and seeing how the market is trading and reading candles, and they're like, I think I want to be a little more cavalier with my finances, and that's totally cool. Here my channel, I what I condone is taking a conservative approach, because when I started this channel, my first live, I think I said, I wouldn't treat your portfolios like, I'll think of your portfolios as if they were mine. Not even mine, my wife's. I'm a little more cavalier in my portfolios, but my wife, especially her retirement fund, I'm very conservative with, because I don't want to shit the bed. I don't want to, like, shit her 401k away. And so, I'm up in her 401k, like, I think 40% in the last 2 years. And although that may not be as great to some of you because you generated more, right? And I know Mr. Poto, if you're watching, you're one of them. I know Bernie, if you're watching, you're one of them. Or Beach Boy. I like I said, if she was to put that in her 401k, she was only generating like 8% returns, 10% returns every year. Because they do like a very balanced approach, and they get all these ETFs that bring, like, 2%, 3%, 4% a year, and so it doesn't work. And her portfolio has grown like a lot more since I took kind of the lead position on how to invest it. It is very conservative strategies. I think $190 cash secure puts on Tesla on our portfolio, when Tesla was like, I don't know, 200 or like 230, something like that. I did 190 cash secure puts, and I brought in, like, I think $50, in premium for those, and I keep rolling them, you know. And so again, just that alone tells you how conservative I'm being. Nvidia, I think she's got like $80 Nvidias, cash secure puts. There's some SoFi, I think $12 cash secure puts that are out to 2027. I mean, it's just I took big chunks with these cash secure puts, but they're very conservative, and so that's kind of the approach that I want to take with anyone that's seeing me. And although this is not financial advice by any means, I mean, I'm telling you, right, how I'm thinking of playing these positions, and how I think of people that are watching me, the type of approach that I want to, like, talk to people about and give information about, right? Um, for this is for educational purposes only, of course, and I don't want to tell people buy calls on like Nvidia, like, or buy 0 day to expiries. I mean, that's just terrible advice, because you guys are not like Wall Street traders, and even Wall Street traders will tell you they lose a massive amount of money all the time. And so that's what I don't want for people watching me. Tom Kaufman is saying, sorry to hear about your back. Are they considering an MRI? Not at the moment, but I'm going to bring it up tomorrow, Tom. Definitely, because it's just it's beginning to like I said, I don't feel like I'm getting any better. And the whole point of like, being on the shelf at work is so that I'm able to get into, better physical health as time progresses. But it seems like I progress, I take 2 steps forward and then I take 2 steps back and I'm back to square one. Then I'll take 2 steps forward and I'll take 1 step back. And then 2 steps forward and 3 steps back. So I'm back at square one, right? And it's just, I don't think that's the way it's supposed to be. It's a little frustrating, but I'm going to talk to the doctor tomorrow and see if they can suggest an expert, in spine treatment. We'll see what happens. The visuals is saying I'm one of the million. No. I want 100 millionaires. That's what I want. Not 1 million. That's crazy. 100 millionaires. That's what I want to create here in this channel. If I can make 100 millionaires by going live and doing this crazy stuff, I definitely will. I mean, it'll make me feel good. Karen D saying my GME cash secure puts of 30 and 35 strikes for January 26 and 27 is so in the money. Don't worry about it. Don't worry about it. Never fear. GME is here. No, it's just there's so much time left, man. Don't even worry about it. I see GME just. I mean, notice how it just keeps trying to. It's max pain is like 23.30, I think, or 23.20, and it keeps coming back. Have you noticed how it just keeps coming back to that channel, and it keeps getting rejected, but it's a 23 right now. I mean, it's just there. It keeps getting rejected, and it's a matter of time. It's at an inflection point right now, and it just needs to make up its mind and either go to 24.25 or go to 21.20. It's just one of those. That's at the point where it's at. But I honestly, there's nothing for sale. There is no paper for sale. The volume's so low, nobody wants to sell, and the spreads are so wide that look at just covered calls. I sold some $23 covered calls for $192. August 13th. So I think that was last week. And right now, I'm only up 4%, but again, I'm daring them to take my 20. Take it. I got a $192, for 5 of them. That's almost $1,000, right? So, I mean, that's a free $1,000. If it stays trading between this channel, I'm not scared to write 23s at this point. I'm going to keep writing 23s. If these get assigned, great. If not, I mean, we'll see, right? September 18th or 17th, I'll be able to have a better idea on how I want to approach this. But at this point, my strikes are expiring 9/19, and it's $175 of extrinsic value at this point, right? So take me out. And if we're trading at $23 from September 19th or September 17th, I may roll another month and bring in another $2. That's another $1,000 in my pockets until I get a sign. If it runs to 25, great. I can run these to 26, 27 out to January and bring in more premium. I'm okay with that. At this point, it's just all premium. My average is in the 14s. So if they get taken away, I'm making $900 profit per 100 shares. So okay, oh well. Mind you, this is just a portion of my GME shares. I'm not writing on all of it. So if it happens to run away, right, I'm going to roll these, of course, but then I'm going to write 25 out to 2026 and bring in like $4 or $5 per share if possible. That's the way that I do it. That's the way that we're going to skin this cat, right? CKT saying, unfortunately, my retirement account only allows me to invest in ETFs, but I can have positions in the Yield Max ETFs. Those dividends have rolled in lately, but I only plan on holding those. The thing about Yield Max, man, is that those are covered calls, right? Those are synthetic covered calls, and they shrink, right, with time, and it's just I don't like them. I'd rather do something else. Of course, everybody wants to talk to me right now because I'm live, right? um, but yeah, I it sucks that they don't let you. They only let you invest in ETFs. But I mean, if you buy ETFs, man, what about Vanguard? The Vanguard ETFs are pretty safe, man. Um, I would go with those. There's some awesome. So VOO, I think, is one of them. And then look at other ETFs like VOO, and look at what you would be getting back. It's compounds anyway. So and I see why they're only letting you invest in ETFs, but Yield Max, I don't know. I don't like those. They're synthetic calls unless you're buying the shares. But even those, they shrink so fast. Um, nah, I'd rather buy stock, man. Do they let you buy stock? I don't know if they let you buy stock, but I would get some on a pullback. Some Nvidia would be great. Some Microsoft, some Amazon, some Apple. I mean, that'd be very conservative, right? But Misty Tree Woodcrest is in the house saying ahoy, lucky 22. What is up, my dude? I hope you're doing great. CKT saying short term before the market has a correction. Yeah, well, it's gonna happen. It's just a matter of time, right? But again, we've been saying this for a while. In April, I think, kind of reared its ugly head, right? But that's where we're gonna go. I think that April was like a nice little appetizer as to what is coming, and it's just, I mean, where do you want to be? Do you rather be holding shares when that happens, or holding, sitting on cash, which is cash your puts. Remember, you could roll those, right? Um, and then um, you can always take your collateral back and take all that cash and go shopping when things are down 20%, 25, 30%. If that's the approach you want to take, I see nothing wrong with that. Um, let's see here. Moneymaker Quinn is saying, I'll chat with you on Discord on how you got control of 401k. Of course, my company has it locked down and I want to manage it also. Currently using my brokerage account to trade. Um, talk to your employer, man. They should give you like a good uh they should tell you information, right? They should tell you, how is it that you're able to take your 401k and reallocate it. I think Charles Schwab is a good Charles Schwab 401ks are really good, especially because you can get 4 or 5% back any uh, on any cash that you're sitting on. In addition, so if you were to do like ETFs like VOO, you'd be getting a nice chunk of change from the ETF, right? Um, but you would also be getting 4% from Charles Schwab from your money being sitting on that account. I think it's SVWXX. Um, so you're making money on both ends. So I would talk to, obviously your employer, and talk to Charles Schwab. They're pretty good, man. They are able to have, one of their associates kind of guide you on how to move, that money. I mean, they want more money. They want your money, right? So they'll be able to help you. They'll be able to help you. CKT saying, I talked to our HR department and also contacted the corporation they utilize and asked about the ability to trade more aggressively. No go. Well, they don't want you to be aggressive. That's the thing, man. 401ks are by definition retirement accounts, and they don't want you to gamble your 401k away, right? Which is why they're so um, they they gingerly will guide you through the most um, risk free routes that you can take, right? So, and I mean, I get it. I know why they're doing it, and I'm not saying that's a bad thing. I'm just saying that, for the most part, you probably have your best interest at heart more than they do, right? So, and you're not. I mean, I would caution again, not investment advice, right? Obviously, but I would caution you not to be aggressive on your 401k, right? That's why I'm with my wife's 401k so non-aggressive, and I only do some very calculated moves on there, and I take care of her money because it's something that I don't want her to take a massive loss on her retirement, man. That would make me feel absolutely terrible, and just it's her little nest egg, man, and I don't want to shed it away at all. Um, CKT saying it's unfortunate, but the only way I could transfer would be to switch job or lose a job. Really, I don't know, man. I think that you could make a switch to like Charles Schwab 401ks. I think that there's lateral moves like that. But I mean, it may be on your contract how they're. I mean, that's one of the ways they keep you. So uh, that's the way that they keep people locked down. So I can see that too. You would have to read the contract, man, right? Speak to a financial advisor, somebody that does this for a living, right? Somebody that's um, qualified, right? And this is how they eat, is guiding people through their 401ks. Um, so you can't buy individual stocks, man. That sucks. So they're only letting you do ETFs. Yeah, no, like that's a pain because I mean I'm able to buy stocks on my wife's account. I just buy stuff that I know is going to make money in the long run. We have Nvidia there, like I said, right? Tesla. Um, I think I bought Open Door when it was in the 50s, like as a gamble from taking some premium from like I think it was a GME uh, cover call for 2026 that I sold. It was like I think GME was like 28 or 29 at the time, and I sold some 30s, and I brought in like I don't know $6-7 in premium per 100 shares, and then I took that money and I think I spent like I want to say like $1,000 or $2,000 on that money in Open Door when it was in the 50s, and then it like ran to like 4 or 5. So I went and I fucking sold, and I took that money and then I deployed it for more cash secured puts, right? And so, but yeah, so that's the riskiest thing that I've done is taking premium money and investing a part of it on a stock that seemed iffy at the time. But just because I kind of saw, all the metrics starting to go haywire and it um, becoming, kind of all these volume in options kind of started raising all these flags, and I was like, ooh. And I mean, it was risky, of course, but if she would have lost those $2,000, I would have been okay with that because she's made so much more money elsewhere, right? So, and it was only like a small portion of the 401k. Um, the visual arts is saying difference between covered calls and cash secure puts. They are both bullish. Um, yes and no. So, okay, there's nothing more bullish than a cash secure put, and that's my argument. Now, some people are saying, well, if you're so bullish, why are you, paying less, and not buying it outright? The whatever company. And I just say to that, well, the company is, I only go shopping on red days for cash secure puts, right? And then I sell them. So let's say, for example, SoFi. SoFi went from $12 to $10 on a specific day, right? And then I go and I say I have $1,000, but I don't want to pay $1,000 for SoFi. I want to pay 900. So I do a $9 cash secure put out to like I don't know January 2026, and then I bring in $2, $3, say $2, just for argument's sake, on my $9 cash secure put. So now I'm realistically, I'm basically telling the market, I like this stock. I want to buy it. Here's my money. Here's like, I'm for sure going to buy it. Here's $900, right? I mean, there's nothing more bullish than that. You're basically telling your brokerage firm, I believe in this company so much that I'm willing to put my $900 that are right here at risk to buy this company at $9, a couple of months from now. Now the stock is at $10. It just went down from 12 to 10. And you could make an argument and say, well, then you're saying that the company's going down even more. So you're being bearish. Like, yeah, I may be bearish on the short term, right? But I'm bullish on the long run. That's exactly why I'm investing in this company. I don't invest in any company that I'm not willing to hold 5 or 10 years. So am I being bullish or bearish? You tell me, because I'm actually buying into the company. Like, I'm risking losing all my money, right? But I'm okay with that because I believe in that company. And I believe in it so much that I'm willing to risk my money up front. All I want is to get paid for that. For me, believing in that company, for me, being very bullish on the long term, I'm willing to put my money where my mouth is and put $900 here, right? And giving it to you. A couple of months from now, if the shares are in this area, I'm totally okay. All I want is $2 per share. That's I think is bullish. Now, covered calls, I think are a little bearish. I basically, say the stock runs 30%, 20%, 15% on a day. And say it's SoFi. It went from $10 to $12, right? Okay. And then I go and I say, okay, I'm willing to sell for $15 in January. So the stock's at 12. I'm willing to sell it at 15, but I want $1.50 per share. So I'm being, bullish in the sense that I think my shares are at least $15 a share, and I'm willing to sell it there. But I want something for my shares. I want money for me being kind enough to telling you my stock's at least $15. I'm willing to give you that contract, give you those 100 shares. And if the stock goes higher than 15, you keep the difference. Give me $1.50 per share, right? I'm being bullish. Now, like I said, I don't invest in any company for less than 5 years, right? But I already got those shares, which means that I've already been put those shares. So my previous comment holds long term, right? Now, we may have gone up too fast. So I go, hey, give me $15 per share. It's a 12. Give me some money. I want to take my kids to the park, to the circus. I want to have a nice meal with my wife. I want to pay my mortgage this month with that money. Whatever my reason is for selling the covered calls. That's very bullish. Now, I can get caught and then the stock runs, in which case I may change my mind and roll over. Or I may just get those shares, exercised and they get taken away. But I'm okay with that because if my average in SoFi was $9, $10 and I sold at 15, right? That's a 50% move. And now, in addition to the premium, I'm getting more money than 50%, right? So that's pretty bullish. The point of the stock market is to what? Why is the reason that you came into the stock market and invest in it? To make money, right? Okay? You're making money. You're just making money in advance, if that makes any sense, right? And then you're putting your collateral to work now. You're using your stock as collateral to give yourself a better life now. Because I don't know what's going to happen in the future, right? Like, again, I may get sick, something may happen. I don't know. But I do know for a fact what's going on now. And so with the information that I have at this moment in time, I'm setting myself up for future moves now by taking money now from my collateral, which is my shares on whatever company. So I can give myself a more comfortable life now. You know, and now this can be debated. Some people are like, well, you're just selling yourself short, because what if your stock runs to like 200%? What if, like Palantir, I'm way underwater with some cover calls with Palantir, right? Now you can make an argument and say you just cost yourself a massive amount of money, and then I'll go back to you and say, well, okay, on Palantir it did, but not on Nvidia, right? Not on Tesla, not on SoFi, not on AI, not on Unity, not on Open Door, not on Rocket, um, not on RXRX. Like, yes, my portfolio, those 2, 3 companies may have run, right? And I'm underwater. But at the end of the day, I'm making money, right? And the other 95% of stock that I hold, um, those are not running away, right? Those are steadily going up, and some are staying down. But at the end of the day, on that 95%, I'm making money, a lot of it, because I'm doing covered calls or cash secure puts. So yes, a couple of stocks may run away from you once in a while, but 90% of them won't. And that's exactly what I like about selling options and being the casino. 90% of options die worthless. And you guys can look this information up on Google. So that's my spiel on cash secure puts and covered calls and what I mean. So yes, in essence, they're both bullish. Mr. Premium is in the house saying, yo, let's go sell calls, sell puts, and collect lots of premium. There it is. And now that is a man. Mr. Premium of the option is a man. That's a millionaire. I can guarantee you that's a millionaire. That I swear to God, this is the person that I try to be. His 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 level of patience is zen-like. Um, this guy will sell a cash secure put for a $20 cash secure put for like $5 or $6, $7, and he will wait patiently for months and months and months, and then buy it back for like a penny. He'll sell some covered calls on like Enphase, some $50 covered calls on Enphase, 3, 4 months out, and bring in $6, $7, and he'll buy it back for like 5 cents. That right there is who you should try to be like. You give them nothing, but take from them everything. And that is exactly how you do this. This is how you play this game. Is you take big chunks of premium and then you give back just a tiny bit. That's how you run this game, And me, I jump in and out at 40%, 30%, because I just, I keep moving, doing lateral moves. Some I will actually wait till expiry. Every stock is different, right? And when you've traded a stock for 2, 3 years, 4 years, you start seeing, how it moves. You start seeing patterns. You familiarize yourself with the movements. You become intimate with it, so to speak, right? And you see what the shares are telling you. You see what the company's telling you, and you're able to trade a lot more comfortable then, because you see how the stock moves, right? And this is exactly where I'm trying to get at. That's why I don't invest in any companies that I'm not willing to share at least 5 years. That's why you do it. My approach is long term, right? I'm not short term on the market. Everything I hold is long term. CKT saying, I think you have to think about both short-term and long-term play, the directions the market gives you. I'm extremely bullish short-term on SoFi, a bullish long-term on SoFi, but that doesn't mean I'm not going to write covered call short-term. Of course, but short-term for me, and maybe we have a difference of opinion, and that's fine. My short term is like a month, 2 months, right? Some people's short term may be like a week, and that's the difference, right? So I like to go out and take best case scenario, and like the juiciest premium possible for me is when I get 15 to 10, 50, 50, 10 to 15% per month on a covered call, on a specific stock. That's like the beauty of it all to me. I like taking in 10, of course, not mind. I don't mind 8%, or 20% in 2 months. I'm okay with that. 20 to 25% in 2 months, great. If I do a leap, I like to bring in at least 40%, 35 to 40%, depending on the stock. But everything is different, and like I said, the more you trade a specific company, the more you familiarize yourself with it, and the more you can see. I like to write short term in these, and short term varies for you, different for me. I just, like I said, some people short term is weekly. To me, that's very short term. Um, Short term for me, like I said, is a month or 2 months out, right? CKT saying when stocks jump 10% in a day, that's when I do my covered calls, my friend. I used to do 5%, but the stocks that I hold are so volatile that now I start waiting until 10% sometimes. And I'm an asshole because the last week, I think AI, C3.ai jumped to like 10%, 11% in a day. And I got greedy. And again, bears make money, wolves make money, but pigs get slaughtered. And I started oinking around and wanted a better entry. I wanted a better premium. So I figured I'm going to wait to sell 2250s instead of just going to 20s and selling some 20s for like for January, and bringing in a couple of bucks. But that's what happens when you're greedy, right? That's what happens when you try to time the market. And even though I'm familiar with the stock, even though I've been trading it for years, right? It came back to bite me in the ass because we had, I think, Thursday or Wednesday, we had, bad news, and PPI was extremely hot, and it just tanked the whole market. I got caught holding the bag. I have nothing written on AI because when AI went to like 14 something, I bought back all my covered calls on every single portfolio. And now I'm holding the bag, so to speak. So we'll see for another day. That it pops 10%. Maybe it goes back to 19, maybe it goes to 20, and then I'll see what it gives me, right? But that's what happens when you try to time the market, you know. Mr. Premium saying at CKT, get out of yield max, man. NAV erosion is killing them. That's what I was trying to say. They just they just erode away, and I guess that's a better term. Is they erode away very fast, and so what you get back is not necessarily going to be. It's not going to be the same amount that basically you spend to buy the yield max, right? Let's say you hold yield max for a year, and yes, it gives you a monthly, right? But if you buy yield whatever yield max ETF, and you look a year from now, how much you bought it for and how much in premium you've made, and you see the difference of it eroding, and see how much is lost. You may be up 10%, maybe, when you start doing the math. And so I say, you just spend a year, you put your money at risk, it eroded away, and you have 8 to 10% to show for. Not the greatest. When you could have just done, covered calls, cash secure puts, and then the wheel, so to speak, and made 40, 50, 60%, 70% back. So you kind of you gave you cornered yourself, and then you kept yourself from growing by getting into the ETF that erodes so quickly. CKT says, I've only been holding them for about 1 or 2 months. Was planning on getting out prior to Friday in case emotion on Powell's speech kills it. Those dividends were nice for a bit, but it was only short term. Yeah, so that's, I mean, I wouldn't, it's not a long term investment, and that's exactly why I'm against it, because any investment that I'm making is long term, right? Any, any company that I buy into is at least for 5 years. And to me, holding it for a few months just doesn't make sense, because my goal is something else, right? CKT saying in the green and out quick. That's how you do it. Premium is saying just zoom out of the charts and compare the senior ticker, and that'll let you know exactly. That's exactly it. CKT, oh yeah, they all gone down significantly, but pretty flat recently. So I was just raking in weekly dividends before the market tanks. Yeah, but when it tanks, it's gonna tank quickly, and those ETFs go down fast. I will write 3 to 6 months out, but usually close to 30 to 50%. But lately, been doing 10 to 30%. Just tough to gauge market for me lately, and then retail just pumping in like money like there's no tomorrow. Yeah, so yeah, it is hard to gauge it, but if you jump into a position when, say for example, AI was down 25-30% last week, right? And some people went in and wrote 1750 cash secure puts out to 2026, 2027 even. They brought in ridiculous amounts of premium. Those have gone down this much now, right? Um, so, it's just, it, the stock is telling you what to do. It's not that hard to gauge it if you know what you're looking for, right? And then, like I said, you have to be um, sure that the position that you enter is something you're comfortable in. If you get assigned, whether it be a covered call or cash secure put, that's another reason for the big chunks that I like, right? So yeah, tomorrow, what is the market going to give us? Nobody knows, my friends. Nobody knows. Um, but one thing is for sure: tomorrow, when the stock market opens, look at what SoFi does. Look at what SoFi is like for $24 right now. Don't be scared to write some October 25s and bring in a lot of premium. Some 26s. Bring in a lot of premium. Try to bring in $2, 250, right? Um, don't be afraid to write cash secure puts if it goes down. If SoFi goes down to like 23, $22 tomorrow, sell some $22 cash secure puts and try to bring in, 15, 20, 30%. Try to bring in, I don't know, $3, $4. Um, AI, same thing. AI is $18. Don't be afraid to sell some October cash secure puts, some 1750s, and try to bring in 10% or 15%, right? So 175 to 225 per put. Unity, it's at 38. Don't be afraid of going and selling some cash secure covered calls, some $40 covered calls out to October. Don't be afraid of the $35 cash secure puts if it's down. RXRX, $5 cash secure puts to October right now. It could bring you like, I don't know, 20%, I think. Not terrible. If it runs to like $6 tomorrow, try to sell some $7, 750s for January 2026 and bring in some nice premium. Try to get over $1 for those. Same thing with GME. Some $23 cash secure puts, not out of the question if you're in October. Do 22s. It doesn't run tomorrow, another 5% or so. So write some 25s to January. Bring in some cash then. SMCI, Don't be afraid of the $45 cash secure put out to January. And don't be afraid to sell some $50 covered calls out to January. It's at 45 right now. Riot, it's at $11.31. Don't be afraid to sell some $11 cash secure puts out to January. Don't be afraid to sell some $11 cash secure puts out to October. Again, it's at 11. Sell some 1250s or some 13s to January. Bring in some premium. BBAI, it's up. You could sell some 750s for January. Again, if it goes down to like 5 something, you could sell some $5 cash secure puts or some $6 cash secure puts out to January and bring in some dough that way. There's so many different ways that you can play this game, right? But it all depends on what the market is telling you. Look at your positions. Are you down 5-10% for the day? Don't be afraid to do some cash secure puts in that stock to get your average down. Is your stock up 5-10% on the day? Don't be afraid to write 1 or 2 strike zones above where it is, and get some covered call money to go out to January or October, right? So many ways to bring in premium, and that premium you could use for whatever you like. You can go and look for stock that has been battered, and that you want to buy and do some cash secure puts on it, or you could buy at market price. What I like to do is sometimes I like to sell stock that is like mid caps and in small caps, and bring in a lot of premium, and then use that premium to buy Nvidia or Tesla or Amazon or Google. You basically are taking riskier stock, getting in that premium, and then going into like large caps. That's wonderful right there. I buy GME all the time, and I just grow my position. Because GME is one of those that is the gift that keeps on giving, and it can run so quickly. CKT is Misty Tree Woodcraft is saying, Mr. Poto, what's the senior ticker? CKT saying wrote AI $15 and $17 cash secure puts for 2027. It went down. Those are up 15%. Why not? There you go. See, you made money. You made money. You took the right. You took the right approach. You saw where the stock was at. You said this is a company that was just at $28, $29, and it's at half price right now. That's a discount. Whenever there's a discount at Louis Vuitton, at Chanel, Lululemon, fucking people go crazy, and there's like people all over. Black Fridays. I mean, Jesus Christ, how was Black Friday? People go nuts Black Friday. They literally will stand outside of a store, at like 3 a.m. to wait till it opens at 6 a.m., 7 a.m., and then go crazy and spend all this money because there's items, that are 30, 40, 50% off, right? That's the same way that I view my stocks. Whenever there's a day that it goes down 30, 40%, I'm like, what the shit? I'm like, you know what? That's a screaming buy right now, given that I do look at, why it's down. Was it a hit piece, or was it they just missed earnings? If they just missed earnings, especially these days, it was expected. We knew that earnings were going to be lower. We knew that, financial guidance, right, was going to be lower because there's not more money like out in the future just yet. There's actually less money just based on everything we're seeing, right? And then they look at their metrics and they look at how much they're selling, what product they're selling, and they can see that we're selling less than we were earlier on. This is a different market altogether. These tariffs are taking their toll. Some tariffs haven't even hit yet. Wait till CPI and PPI take into account the tariffs that just hit, right? Because those have not been taken into account yet. Most of them have not. Let's see what the August PPI and CPI look like. And I'm telling you guys, man, I'm licking my chops because I think those numbers are going to be pretty bad. Now, whether the powers that be want to cook those numbers, or one of the guys that is looking to replace the person that was fired when inflation numbers came in. Um, that guy said, "I don't even know why we release these every month. We should release them every 6 months." That's crazy. So they're moving the goalpost. So, like, that right there is scary because they're now telling you these metrics that come out every month that have been used for decades that give us a pulse into like what the economy is. These metrics don't work, or we don't like them because they're not favorable towards us. So we're gonna stop, disclosing them every month. That right there should raise alarms. That is enough to tell me I should be sitting on a lot of cash, a lot of cash. So that's why the cash secure puts right now are king. And that's why I only go when there's drops of 10 to 20% in a day. And I go low, a strike or two strike zones lower than where it is on that day so that I'm protected to the downside, right? Anyways, I've been on almost 2 hours, guys. I was honestly just gonna be on for an hour, but I started rambling, and you guys, oof, thank you, Jesus Christ, that's me. So yeah, I'm probably gonna go try to lay down and maybe rest because I gotta get up tomorrow early to go to the doctor. But yeah, so thank you so much for watching, guys. Do not look for me tomorrow in the morning because I'm not gonna be on. But like around 5 p.m., I'll probably go on if I'm not really hurting tomorrow. But definitely Tuesday, back at 8 a.m. 8:30. 8:30 is probably a better time. And so thank you, my fellow simpletons and degenerates, for watching. I will be seeing you guys, hopefully tomorrow evening. And I wish you guys have a good evening, a great night. Hope you guys are having a great dinner and are with your significant others and are at peace tonight, having a great night, and getting ready for tomorrow. Start reading right now. Look at Bloomberg on YouTube, right? Look at the Bloomberg Asian market. See what they're doing, because sometimes that's a good indicator on kind of how we may open, right? And then, at 4 a.m., we start pre-market trading. So, again, don't put, too much faith on those, but it just gives you a nice little insight. However, the market opens at 6:30 a.m. tomorrow morning, whether we like it or not, and I think we love it. So we'll see what it brings us tomorrow, right? And meanwhile, you guys take care. Let's make money. And remember, give them nothing and take from them everything. Hit that like, hit that subscribe button if you're a first time watcher, so that I can send out an alert to you guys when I go on. Thank you for watching, Jared. Misty of the James of the Wood Tree, thank you. CKT, Mr. Premium of the Option, thank you for watching. CKT, D Visual Arts, Moneymaker Juan, Tom Kaufman, Kent's mom, Karen D, Tom Kaufman, John Harpster, let's see here, Hector, and Chase, Rosita Parker, Manda number 5, Ricardo Canales, not a lurker is in there. Oh man, I miss you, not lurker. I'm sorry, dude. 2K, Hector, Double D, Mr. Lucky. You guys rock. Cannon Fodder. Thank you so much for watching. I'll see you guys tomorrow. Have a good night and God bless, guys. Peace.